Hello everyone, I just want to take you through this Great British Pound US dollar trade this afternoon and how I came to this buy, right? So let's start on the daily. Now, to get initial daily bias, what I can do is plot out our daily fair value gaps, right? So we have our fair value gap here, right? Here is our internal liquidity, you could call it, right? And yeah. So now what we can see, right, is on the daily chart, the Great British Pound US dollar breaks through this bearish fair value gap, right, inverting it, showing us bullish momentum. Then the days after that, we retrace into this bullish fair value gap, right, after engulfing this bearish one, and we react off of it. Now, we've now gone from this external range liquidity back to internal range liquidity. And so that's why, right, after seeing this super engulfing candle, right, on Thursday, and then Friday trying to come past it but not managing, my bias going into Monday was bullish, completely bullish. I'm expecting, right, that price is going to come into this fair value gap, right? Because price always goes from external range liquidity to internal range, and from internal to external, etc., right? Now we go into the day, right? Let's put out our 4-hour fair value gap. Now this one struck me a lot, right? Because we've been coming to this 4-hour fair value gap and we've just been bouncing off of it. And also this 4-hour fair value gap, right? So price is ranging, but we were getting a lot of rejections from this 4-hour fair value gap, right? So you know there's a lot of liquidity here. So what I was wanting to see is how price reacted when we came into this 4-hour fair value gap. Now, if 4-hour is our higher time frame, then 15 minutes is our middle or lower time frame, right? Now we, at about 6, this is GMT plus 2, right? We went into this 4-hour fair value gap, right? And we created a series of up close candles before breaking through them, right? And breaking back up. And in doing so, we created a fair value gap. Now, this is also could be an accumulation, manipulation, and distribution pattern, right? And so what I like to call this is a unicorn model. And what we look for, right, is for price to then, right, what it did here is it came and swept all this liquidity, right, all this. If you go onto the 5-minute chart, you can see these relative equal highs over here that price came and ran through to collect the liquidity. And I took a little short, retracing back into this, right? But the main thing was bias, right? The bias was bias for the day, was long, so my risk was going to be in the longs for the day. So we came back into this breaker block plus fair value gap, right? And what do we see on Euro USD, right? It retraces to this low and it sweeps this low right here, right? We sweep that low on Euro US dollar, but we don't own the Great British Pound. What that creates is a divergence or an SMT, right? And what that means is that Euro US dollar has already collected this liquidity and price is already starting to move up. So that is a great indication, right, that we're looking for buys. If you also go to Euro Great British Pound, you can see how bearish this market is, right? Just straight going down. What does this mean? It means the euro is weaker and the Great British Pound is stronger. This gives me an even better consensus to buy, right? So 1 o'clock comes and we see price on the 1 minute, right? Our lower time frame from 15 minutes is 1 minute, right? 4-hour, 15, 1 minute. And we tap into this unicorn pattern, right? What I want you to notice is if we take the Gantt tool from the top to the bottom, is that we are in discount, right? Price is cheaper. It's cheaper to buy the Great British Pound now. We are no longer in premium of the range. And with that, that's another nice confluence that we are going to look for long positions. Now, my model works like this, right? What I want to see is for price to come down, right? Sweep liquidity, engulf an inverted fair value gap, and create a change in the state of delivery, right? That's what I look for my entries, and that's exactly what happened here, right? Price came into this breaker block, or unicorn pattern or whatnot, right? We swept this liquidity low, right? Huge wick. In doing so, we created a bearish fair value gap, and then price inverted it and created a change in the state of delivery, right here. And at this point, I entered long, right? Down at the wick, and targeted the next high, right? You could also have I could have set my stop loss to 1 to 2, right? That would have been around here. but there was definitely more liquidity to be grabbed, especially this high over here, right? You can see our price shot through when it came there, right? With that would have been a really nice 1 to 2.6 risk to reward. I hope that makes sense. That's about it.